Hi, everyone. Welcome to Brainstorm. I'm Carson Cook, joined by my colleague David Golding. Today, we're joined by Phil Lojacono, a Swiss fintech entrepreneur turned Bitcoin strategist. Phil co-founded Berglinde, a Bitcoin advisory firm, which was just acquired by Blockstream Capital Partners. In this episode, we'll unpack Switzerland's evolving role in institutional crypto and explore how it competes globally. Welcome to the podcast, Phil.
Thanks for having me. I'm excited.
Yeah, thanks for being here. So first, Phil, tell us a little bit about Berglinde and what you're now doing with Blockstream Capital.
Yes, absolutely. Happy to. It's been quite some weeks, but to be honest, it started off very interesting. I mean, I do have a background in finance and banking. Originally, started my own company, a peer-to-peer lending platform, 13 years ago, and now 2 years ago started to get back into entrepreneurship after we have sold the first company. But wanted to basically finance it myself in the beginning and start with advisory and consulting services. And with time, when I advised a couple of banking clients and pension funds, I realized that Bitcoin-backed lending has a huge potential because there is access to cheap capital from banks, and there's clear market demand. So we started building that part ourselves as like an asset management service, and in parallel continued to work as an advisory boutique for Bitcoin strategies, Bitcoin services for institutional clients. And I think that combination, it was probably also a bit of a lucky punch. The market dynamic is clearly goes in the right direction these days, and that seemed to be attractive for Blockstream Capital Partners, which is essentially the investment arm connected to Blockstream technology, but also BSTR, the Bitcoin treasury company, which will hopefully go public over the next a few months. And essentially, the goal of BCP is to get the Bitcoin asset management, the Bitcoin capital markets up and running across the globe, and offer different asset management services, but also the technology around it to get the traditional financial world onto a Bitcoin standard.
Well, congratulations on the acquisition, Phil, and let's get into the Bitcoin landscape as it exists in Switzerland.
Thank you very much. And yes, I'm excited. Let's go.
Switzerland has long been seen as a pioneer in crypto regulation, from Zug's Crypto Valley to some of the earliest fintech laws. How would you describe its position today compared to the US, UAE, and Europe in particular?
Yeah, it's quite interesting because generally the history of Switzerland is that we are not particularly fast, but in the end it will be a relatively balanced regulation, a relatively balanced and market friendly way on how we integrate things. So that's how it used to be. Then in 2017, our government, led by primarily two out of the seven, we call it Bundesräte, like a counselor kind of thing. By two of them, they were very progressive, which was surprising. Like in 2017, we kind of made was one of the first countries, made the first step and gave it a quite good or manageable regulatory framework. And then since then, I would say we fell asleep a little bit. I mean, we didn't change it to the worst, but we also didn't progress. And that's as it's usually the case. It's a question of leadership. Those two in the government, in our those two counselors, they stepped down, and then the regulator really kind of canceled their goal of being innovative or making sure that the Swiss financial place is innovative. So that's a bit unfortunate, I would say. Now we realized it, and also, to be fair, I mean, Switzerland has lost some major chances. Like, for instance, I think there would have been a good chance of getting Tether into Switzerland as the company, because the management and the founders, they live in Switzerland. So, but unfortunately, we missed that chance, and I think that was a little bit of a wake up call. So now let's see. I think we lost the initial advantage, but we will see if we can catch up.
Crypto risk isn't just volatility. Margin calls, liquidity traps, funding shocks, they hit fast. Membrane's risk engine, powered by BitPulse, gives institutions a real-time, full lifecycle view of risk. Stress test portfolios, anticipate margin calls, and standardize calculations across counterparties, all in one platform. Risk quantified. Request a walkthrough at membranelabs.com.
Phil, when you compare some of the regulatory regimes that exist, like MiCA, Switzerland, US, UAE, I like to think about legal capabilities in a few ways. Like there's custody, there's execution, there's payments, tokenization. Is there any place where Switzerland you feel still stands out as a leader? And if so, why?
Regulatory wise, I'm afraid I have to say there's no place where I would say we really stand out. That's it's. I think the UAE, for instance, they picked up on pretty much all fronts. I mean, that's also, I've been in touch with the regulator a lot. I'm also the vice president of the Bitcoin Association Switzerland, so therefore I have some regulatory jobs to do as well, and talk to the regulator. And there, the excuse, so to say, was always, well, okay, but Switzerland has many other advantages over UAE, which is like stability, democracy, all these things. And to be fair, that's a good argument in general. Like they said, well, look, it's not only if we are on that particular regulation, there we are at the forefront. There comes a lot of other advantages with it. And I always said, well, that's fair, but nevertheless, now we have the US, and I mean, it's hard to argue with the US also being close to, as they call it. Well, that's all. That's not a democracy, right? The US is the democracy. So there's nothing to say against that on that front. So now, unfortunately, I don't think on the regulatory front right now we have nothing that stands out. I do believe it's a comparable to other jurisdictions. Now I have some hopes, because last week the Swiss regulator FINMA, especially when it comes to stablecoins, came up with a proposal for an update, and that seems to go in the right direction. So that, at least comparable to Europe, should give us an advantage again.
Building on what you said about both the US and the UAE, both have recently passed crypto regulations, which we're seeing based on our clients. These jurisdictions are becoming much more favorable for doing business than they were in the past. Do you think these changes give those jurisdictions a leg up when compared to Switzerland? And is there anything that they're doing different, either regulatory-wise or from any other perspective, where Switzerland could learn something from those players?
Yeah, 100%. I mean, in general, one thing that I've learned, it's the most important thing is it's a mindset question, right? And if the mindset from the very top is the right one, then it will trickle down through the different regulators, the different branches of government, etc. So, for instance, with us, it was very clear back in 2017 and until 2022, I think, roughly. The FINMA had three goals. Those were stability in general, like not security, like everything should be very secure, but also they had the goal to be innovative and to create a competitive financial environment. Now the whole thing with Credit Suisse happened, where I would strongly argue the regulator played a huge role in that as well, and clearly failed in their initial goal of stability and security. If the second largest bank fails, and is clearly fell under the too big to fail mandate. So, but the result, unfortunately, was that the innovation and the competition goal was kicked out. So it was only security and stability. And that in the end, that is what hinders everything, right? That's the big problem. And therefore, yes, especially if you see such a change as the US has seen with the new administration, clearly it is at the very top. No matter what you think about the actual details of it and anything that comes with it, from the very top there was the directive given that yes, we want to have crypto businesses here, and that's it. And that's a very strong statement like that. And that is something that is missing. And therefore, yeah, we have seen a lot of businesses already at least opening up branches in the UAE, Swiss companies, and clearly now they're also looking into the US. It's a huge market. It makes a lot of sense if the regulator is open for it and creates a business friendly environment. Then sure. And to be honest, it's sometimes it's sad to see that as a Swiss that we give that up, or we gave it up. We're working hard to catch up again. But it's also good. It's how the market should work. There's nothing to say against that.
Phil, we're seeing clear demand in Switzerland for Bitcoin-backed lending. It seems like that's getting more and more established in the space. Who's driving that demand? Who are the key players, and where do you see it developing in the short to medium term? And for our listeners, Bitcoin-backed lending means lending against Bitcoin as collateral. Curious to get your thoughts on that, Phil.
Yeah, that's actually quite interesting, I would say. Switzerland has this special situation that we have zero interest rates, right? The Swiss franc has been very strong historically. Now, people argue that the National Bank did a very good job. I would say it's more likely that we were the last country jumping off the gold standard at the end of the 90s, so we are just a couple of years behind. But regardless of that, there is very strong demand across the globe for the Swiss franc, which means that our national bank constantly tries to devalue the currency a little bit comparably. It still increased significantly compared to the rest of the currencies, even the US dollar and the euro in particular. So they try to save the export industry on that side a little bit. However, what that also means is that essentially there is no interest on any sort of savings, and people are looking actively in investing more. And banks, obviously, they are interested in earning more money as well, because with zero interest rates, you simply don't earn enough anything, right? There's no interest rate split on it. So naturally, I think that drives the demand for general lending. Also on other assets, not only on Bitcoin, of course, but also on traditional assets. People realize, or the market realizes, that look, if there are zero interest rates, it's very attractive to take on a loan and buy more assets with it. So something like that. So naturally, and we always had that. We also had that a while ago or years ago on real estate. Our interest rates were always lower than compared to the rest of the world. So I think naturally there is a tendency in the market, given our strong currency, to look into that. Now, what always surprised me though is that also comparable to the rest of Europe, our banks, and also comparably very traditional banks, conservative banks like state-owned banks, they were at the forefront of any sort of crypto Bitcoin innovation. There we have the Cantonal banks, for instance. This is, when you look at the Swiss banking environment, we have 270 banks, and pretty much every canton, which is comparable to a US state, but obviously on a much smaller scale, they have their own bank, and which is in some cantons 100%, in most it's like 51% owned by the state. And so those are really traditional retail banks. But some of them, like for instance, the one from Lucerne, it's the second largest cantonal bank. It's it's a mid-sized bank. It's like 70 billion balance sheet. It's not nothing, but not very big. But they offer Bitcoin and other crypto buying and custody since about 2 to 3 years. So relatively early for a traditional bank. And in the meanwhile, we have, I think it's seven banks who offer services like that. But so far, it was just trading and custody. And now, given what I explained in the beginning, given the market structures overall and the general demand for debt with on the Swiss franc, clearly they realized, well, so we could earn like something like 80 basis points on real estate, on a mortgage, or suddenly the market tells us that we can earn 5.5% on Bitcoin. And so now all they had to understand is that Bitcoin is not this bad asset, but rather it's a super attractive collateral. I mean, if you manage the volatility, which also decreased significantly, in my opinion, it's the perfect collateral, and that's why many of the banks started to pick it up, and it's an interesting market dynamic right now. And when I compare that with other European countries, I can't say that we are very far ahead here. Like there's a lot of demand from banks, and when I talk to Germans, we are nowhere there yet.
Mm-hmm.
So very interesting color there on the Bitcoin-backed loans. Are you predominantly, like those that reside within Switzerland, are you predominantly seeing them with principal in Swiss franc or US dollars or euro, or does it kind of not matter when it's within Switzerland?
No, it does matter a bit. It's so clearly the biggest demand is still in USD, but that's just generally because there's the most liquidity in it. On the Swiss franc, you can see when you compare it to the risk-free rate now in the last few months, the spread on the Swiss franc is still relatively, or comparably speaking, higher than on the USD. The USD came down a little bit. The Swiss franc is still at 5.5% ish, which is essentially 5.5% risk premium, right? And that's I would say on the institutional side, not really the case anymore on the USD. But in general, yes. I mean, of course, people. Let's put it differently, maybe. Up until February this year, or when was the Liberation Day?
Around
Yeah, February, March.
February, March, something, right? It's somewhere in spring. Up until then, a lot of people asked us like that it's much more attractive to take on debt on the Swiss franc instead of the USD, and then suddenly the USD devalued by roughly 7.5% to the Swiss franc in pretty much 1 month. And and then there were a lot of we got a lot of feedback from people who said, well, that now we understand why it makes sense that we pay a little bit less.
Going back to the cantonal banks for a minute, in the U.S., I think one of the things the banks are struggling with is how crypto, including Bitcoin, is treated on the balance sheet. Within Switzerland, is there anything that makes it more manageable for those banks to interact with crypto, lend against crypto, or are they kind of in the same state as the U.S.?
No, it's terrible. I mean, it's not that it's unclear, so they know how they treat it, but it's really not attractive yet. So the big problem there is that the regulator treats it as basically an uncollateralized loan. So a bank, even if they say, well, it's over collateralized with Bitcoin, they have to treat it in their own balance sheet structure as uncollateralized loan.
Wow.
Which makes it incredibly expensive. Like they have to cover it, I think, 8-fold with equity capital, tier 1 capital. So it makes it unbelievably expensive. And this is something that services like ours are attractive then. So especially the younger banks, like we have, for instance, we have 2 fully regulated crypto banks in Switzerland, that's Amina and Signum. Their balance sheet is simply, given their age, not yet so strong. So the capacity to put to get lending or to get money out there on lending is not really big. So then we could jump in, and the same goes. Obviously, it's also expensive, even if you have a very strong and big balance sheet. So most of the traditional banks, they say, well, we do offer it because we see that it's attractive, but we also need some sort of a fallback option, like an out of the balance sheet option that we could offer to our clients. And that's what we want to do. Like we basically help them to set up both, like their internal operations to manage a 24/7 tradable security or a collateral, but then also we can help them with the financing. Now, especially after the acquisition, there should be quite some money available for taking that up.
If the risk weighting is so high, like if they truly have to be treated on the balance sheet as uncollateralized, then Phil, help us understand why, I guess, the banks were so early to adopt this form of lending if it seems that it is very expensive for them to engage in this behavior.
Well, because it's quite simple, because the margin is still very high. Like even if they price it much higher than any other lending that they do, like all of the traditional banks, they offer Lombard lending, right, against any stock, any asset whatsoever. So if you go into crypto or Bitcoin backed lending, then you're talking about at least 1% higher margin. So it is attractive. So they get paid to a certain degree, and that's what makes it attractive. Plus, also clearly the market pushes them in that direction. I mean, the demand is really high, and they get requests all the time about it as well.
Yeah. And a quick follow-up question: it's only institutional? Is there a large retail Bitcoin-backed or crypto-backed lending market in Switzerland?
Starts to pick up, but it's not that I could say, well, it's like half of Switzerland is looking into a Bitcoin back loan. That's not the case, but you can see it more and more. And now you also you have real retail banks offering services in that direction, and clearly they will look into it as well. I mean, at one point, especially given our real estate prices, as pretty much everywhere else, they skyrocketed. So it's just almost impossible to buy a house or an apartment as like a 30-something-year-old young family. So then they're looking into what are the alternatives, right? And how could we possibly come up with the equity part to buy a house, to buy real estate, and so other alternatives will evolve out of that.
Going back to the cantonal banks for a minute, given that a number of them entered Bitcoin-backed lending and have been doing it for several years, it seems like we haven't talked about the private banks here. Is there a reason? Have the private banks been involved, I guess, is the first question. And if not, is there a reason that the state-owned banks, the cantonal banks, have been there where the private banks have not? A lot of times things go in the opposite order. So curious what might be driving that.
Yeah, so one of the more interesting things that I also, to be honest, I just learned in the last 12 months is that lots of the private banks, they are not really equipped for offering credit. I mean, they sometimes do it. They sometimes do that, but very, very, very rarely. So, for instance, we started working now with one particular private bank, and there every single credit goes through the board. Like everything. And I was very surprised. But then they told me, well, their initial organization is just not set up like that. Their initial organization it's a wealth management company. Like they help you setting up the right investments, etc. Not really credit, not lending. And so I honestly didn't know that before, and so yeah. But that's something that we now help them. So we can help them on that particular offering. We can take the risk on our own balance sheets. They can just offer it to their wealthy clients.
Got it. Okay, so it's largely a function of the purpose of those private banks, and that they've been largely driven by wealth management. It means that lending and credit hasn't been as big of portion of
that's
their
more like
business.
like a retail bank, or it's a different type of how do you say that? It's all around banks basically, like a UBS offers all services, right? And all the cantonal banks offer all services, including payment, including transactions, lending, and all these things.
So UBS has been largely absent from the crypto landscape so far. How significant is that for the broad Swiss market? And do you expect that to shift once the integration with Credit Suisse stabilizes?
Well, I mean, what should I say? UBS is it was always just personally frustrating for me to see them so reluctant on touching anything that is crypto Bitcoin related. I mean, they have an internal kind of a research team, but they still treat on the blockchain, whatever that means. I always felt like they're stuck in 2017 somehow. Now, what I do understand is that obviously integrating the second largest bank is a massive challenge. So that they are not at the very forefront of touching anything new, I can see that. I can see why that is. So I don't think the effect, to answer your first question, on the Swiss market is not big. That's okay. I mean, that's not a big problem. I mean, the market size compared to the traditional financial world of anything Bitcoin crypto related is still minuscule, right? It's like we're talking probably less than 1% from the bank operations. So then the UBS in any way is not so important in Switzerland as it is all across the world. So it's like the size of their balance sheet within Switzerland it's also the biggest bank, clear, but it's not for us anything else. Any other bank is as important, right? So.
Back to the cantonal banks. The cantonal banks are quite an interesting part of one of the more unique parts of Switzerland's involvement with crypto. Obviously, during the lending process and taking in the collateral, these cantonal or majority state-owned banks are owning the crypto. They have it on their balance sheet. Can you go a little bit deeper into the typical ownership structure of these cantonal banks? And what impacts that might have on the actual crypto custody? Like, for example, does that mean that the Swiss government actually owns some Bitcoin here, or how does that work in Switzerland with these cantonal banks?
Yeah, sure. But there are in Switzerland we have 26 cantons, and I'm not even really sure, but there are a bit more than 20 cantonal banks, and I think it's something that is historically grown like that because in most cantons, aside of I think one, the majority is owned by the canton, like by the state, essentially. And with all of them, you have the so-called Staatsgarantie, which translates to like a state guarantee. So basically, the state backstops the whole thing. So you always know that your money is safe there. Now, what most of the people don't know is that on any bank, something like Bitcoin or any other crypto asset is segregated from their own balance sheet, meaning so that I mean, there is you can think that, well, if they mess something up with the custody, for instance, that obviously they will probably feel obliged to do something to make sure that you get it back. However, it's not part of the legal mandate, so it's not on their balance sheet. It's not that this particular part is constitutionally backed by the government. And so that's also what it means. Like just because of the canton owns a part or the majority of a bank, they don't have it on their balance sheet. So you cannot say, and that is sometimes that's wrongly portrayed in the media, or especially when you are on in the crypto bubble, everything will be bigger than it really is. So most of that means that the Canton doesn't own any Bitcoin. So it's not that even through their shareholding, that's not the case. That's segregated from their balance sheet. And that also doesn't mean that the state in itself is much more Bitcoin friendly than any other state.
Mm-hmm.
Are your assets being used to their fullest potential? Discover how Membrane unlocks their true potential, offering a state-of-the-art toolkit for crypto lending and borrowing. Navigating the complexities of digital asset lending and borrowing is challenging. Direct settlements, test transactions, and cumbersome spreadsheets lead to errors and inefficiencies. But what if you could manage these operations with precision and sophistication? Membrane is turning this vision into reality. Our mission is to evolve your crypto lending business with an efficient, reliable, and tailored software suite. Our end-to-end solution simplifies your loan management process. Experience real-time insights and historical analysis for enhanced profit and loss tracking, while our advanced risk metric monitoring ensures you stay ahead of market dynamics. Automated loan servicing facilitates efficient portfolio management. With Membrane, you gain control by tracking payments, viewing real-time loan health data, and delving into risk metrics. Our automated system minimizes human error to ensure accuracy in every transaction. We are a comprehensive operating system for lenders and borrowers. Seamlessly interact with counterparties without sacrificing any detail of your agreements. With Membrane, you're not just managing, you're excelling in digital finance. Request a demo at membranelabs.com to learn more.
So moving on to a little bit more market structure, context specifically with regards to Bitcoin. I'm aware that exchange balances for Bitcoin actually hit a 6-year low this past October, which is quite shocking, especially as the asset grows in market cap and collateralization of the asset grows as well. As the broader Switzerland economy is thinking about Bitcoin-backed lending and Bitcoin collateral, how are you guys managing that liquidity risk, the potential slippage in terms of liquidation? Because obviously, if you're liquidating a loan, you have to think about how much you could recover in the event of sort of a flash crash or a deleveraging event. Something like we saw on October 10th would be a good example of that. But how are you managing that liquidity dynamic?
Yeah, so I mean, there you have to differentiate between our risk profile and the risk profile of some of our clients, which are banks. And banks tend to be much more risk averse, especially because it's still a very, very young product for them. I mean, we have started with some pilot customers now, but many of them start, for instance, with like 20% LTV, and they start liquidating at 80%. However, you have to understand that none of the banks, they actually don't want to liquidate. So it's very, very rare that anything gets liquidated, even in a flash crash. Because most of the time, and I think that's how you should look at the decision-making process. Like they have to get comfortable with the asset in itself first, before they wouldn't even offer that. Mm-hmm. So when that happens, like on October 10th, and it kind of wicks down very, very quickly, I think the worst thing you can do is liquidate at the bottom, right? Because then literally nobody would be happy. Like nobody, the borrower not, the lender not, nobody's happy. Quite the opposite. And so the way that usually works is that the banks, they get comfortable with the asset, and they start offering lending, and then the liquidation process is very slow. So there's no automation in there. There's a lot of hand holding with the customer. There are huge margins in there. Because they want to do that. And also you have to understand, most of the time when banks start offer such a service, they don't offer that to retail, and they don't offer that to one product clients. So quite often it's high net worth individuals that they start with, and then that's part of their portfolio. And then yeah, as you can imagine, it's not particularly nice if you have a customer with, like, let's say, a 20 million portfolio, 3 mortgages, 10 million in stocks, and a long lasting relationship, and then you liquidate her or him on a 500k loan, which is 50k underwater for 10 seconds in the most extreme case, right? So they don't want to do that. And that's also our experience now with our direct investor, who provide us with debt capital to invest directly without the banks. Most of them, if anything, they want to acquire Bitcoin on sales, essentially. And they do not want to get liquidated. Also, from the lender's perspective, they would much rather get the Bitcoin. Because all of them understand the asset and believe in the asset in itself.
Looking ahead, like 3 to 5 years, what would you imagine Switzerland's role ideally might look like in the global Bitcoin ecosystem? Is it still a hub? Is it a bridge between old finance and new finance? Is there something different that you think it could shape into? What's your expert opinion on this?
I certainly hope so. I do believe that some of, especially Bitcoin's most important principles, are deeply rooted in the Swiss culture as well, like sound money, the national bank's independence from politics, all these things. That's very, very important for Swiss people. And we do have direct democracy, luckily. So I hope we can stick to that for a while, and that would mean that yes, Switzerland can come out as like one of the continuously leading hubs for private wealth solutions, which it already is, but then also for especially Bitcoin focused solutions.
Phil, thank you so much for joining us today to talk about the Bitcoin ecosystem in Switzerland. Thank you for coming on.
Thank you, guys. It's been a pleasure, and I'm looking forward to stay in touch.
Thank you.
Thank you.
Storm!